Indiacharts publishes Nifty daily video updates, the weekly Elliott Wave outlook, and the long short report covering all asset classes.
Hi everyone, this is the 14th of May 2020. This is Rohit Srivastava from Indiacharts giving you my market update on what all has been going on. It's been quite a while since my last one, but that's also got to do with the narrowness that the market had hit into the second week of April. I think you stopped moving too much 50-100 point trading range, except in the expiration week where the 50% retracement mark got achieved all at once. But what we ended up getting there is an island reversal, a situation where the markets gap up and then gap down the same trading range, which means that you have a gap on both sides and you've really not had any trades inside that range. And so the price action which is above it is called an island. Technicians would look at that as an important reversal level. Now that island gap is somewhere between 9,600 to 9,730. And unless we get past that, you are going to keep getting, some kind of near-term resistance. The real question is that a final top? Because you can get island tops at the point from where, markets top out in a counter trend bear market rally and then sell off from there. Among many things which have bothered me though during this time period and even now, I think today, because after all the announcements of the last couple of days, US markets being down overnight, our market is back in the 9,300-400 trading range, which it spent most of April in. The only thing is we fell slightly below that last week and have bounced back from there. So the key thing that happened is last week I sensed that sentiment was really very, very extreme, far more than I had thought. Even after the rally that we've seen from say 7,500 to 9,800, everybody's been willing to sell and short this market at every level. And I think that's the interesting takeaway. We've not even moved back from say hopelessness or extreme negative sentiment to even hope. Forget about getting a positive extreme or news flows that could have really happened. So we haven't gotten to the hope point that things have actually come out of the red zone. And that's a slight concern because it gives me a very similar feeling to what I had in September before the announcements of the tax breaks and so on. And you had a similar kind of sentiment, behavior and pattern set up into last week, although you were not testing the previous close, at least on the Nifty, which is what you did in September. So that difference is definitely there. And there too, announcements kept coming week after week, not day after day. So over around 2-3 weeks, you had the FM and others, come out and make announcements. So it was only the last announcement that gave the tax breaks that set off a rally that lasted for a couple of months. But it was a pretty lethargic rally, though by the end of it, it started looking hopeful because that was also a period associated with some kind of reflation happening, which is, I think, the theme to continue to watch out for. But coming back to where we are right now, last week when you sold off, things could have gotten worse because the worst performing sector had been the banking sector, which has taken most of the brunt, I think, even though markets were bouncing back. So in a typical ABC structure, when you do a counter trend bounce up to the point where you get wave B, you continue to see stocks that will still make new lows because either they didn't complete their fifth wave or because something is basically not complete. That's the basic reason why some stocks still make new lows while wave B happens. And then when you get wave C of a counter trend bounce, it is slightly more broad based as everything completes their retracement rallies. And that's where markets actually start rolling over. So that's been my other sense that, there have been many stocks, and specifically, of course, in banking, that were still at the base or bottom end of the trading range, had not really bounced back enough, including those those in the naturally hit sectors like, of course, not airlines so much in India, though they are hit, but say PVR, for example, a stock that had been continuously trading to lower lows. Banking has just been the weak one, and that too everywhere. So these trends are common in various financial markets. I think the US market had shown the maximum upside potential gains because of the big announcements of couple of $1 trillion worth of bond buying, especially when they stepped into the junk bond market and stopped the oil collapse happening in the oil bond market. So that completely changed sentiment and allowed US markets to rally some more. Now the question becomes, has the recent pullback really ended the trend on the way up? So this chart which I posted yesterday, in fact, last evening to subscribers, shows that we were looking for an ABC pullback to the lower end of a downward channel, and I think we've almost achieved that yesterday itself. What we are really looking for, therefore, is a move on the upside from there. Now it may take a couple of days to base out. Now, unless the market's going to a free fall from there, of course, that would be a completely different scenario. But if they do hold in a ABC format with a channel, then probably you still got some more upside. And that sense you also get is from the Nasdaq, which has retraced more than 78% for the Nasdaq 100. The Nasdaq Composite, of course, is very close to the 78% retracement mark. And so having pulled back that much more than the S&P makes it look like maybe it's trying to still squeeze out a higher high than it did the last time. So that remains one more open option. And in the meantime, while the US made announcements and many other parts of the world we got stimulus, it's a look back at, there was an expectation build up in the previous quarter also that when, all the monetary action by central banks was not really causing growth to come back. And this is, of course, before the COVID case, that growth had already come to a stall. The expectation was that governments would have to step in with some kind of fiscal stimulus or some kind of spending plan to get the economies moving, maybe on infrastructure, maybe on other projects, so that the demand side is kicked off. Now that's partly also the expectation I think I had from the budget. You got some, but you didn't get something substantial. And now that this crisis has hit, so something I said in Feb itself, I said, well, if you're looking for a crisis, you'll get a crisis, and that's when probably governments want to act in a crisis, then you probably wait for one. And now that you have a crisis, expectations have been high for the last month that something would come up, but we still didn't announce much apart from the LTROs. That means again monetary side, nothing on the government side till just now. So they've really waited very, very long to put this out. Maybe again waiting for all the negative sentiment to get absorbed in the market, or you may simply say waiting for the lockdown to end so that they can have maximum impact on the upside. And that's what the PM did by coming out and speaking up. But again, before I reflect on that, I must mention that when this happened, the markets were almost breaking down 2 days ago, where the Nifty had gone back to the 9114 previous swing low, and the weekly swing was at around 8900. So 8909 is what I said would hold, maybe if you have to, on a higher top, higher bottom basis, right? And on the daily charts, you would have an immediate swing closer to 9114. So you fell below 9114 intraday, but we didn't really close below it. But of course, so it was almost the break of that swing, but 89 did not. However, when you look at Bank Nifty, you can argue that Bank Nifty has actually broken the previous swing on the weekly chart. Again, maybe not necessarily closing below it, but what you got, so when you actually break a previous swing, what you look at, so either you would have to change your view on that, or at least risk that the trend has changed. But the next thing that we look at, so there are always multiple tones in TA, is the 61.8% retracement mark, and Bank Nifty touched exactly that at around 18,350 and managed to bounce back from there. So the question then is, now that we've held at least the swings on the Nifty and the retracement, is this a resumption of the upward move that was going on, which is what I've been probably saying for several weeks, that something tells me we are not done here. Among other things which I posted yesterday was the weekly momentum on Nifty. So the weekly momentum actually crossed over to the buy side. It has still not done so for Bank Nifty. And you have to really look at how this index, so some people ask me, well, what if it's a wrong signal? So you have to look at what bear market rallies do based on the weekly momentum, and go back and look at 2000. I'm not going to run into that right now, but when you look into 2000, 2008, or any other previous bear market, or even downward trends like 2015, you can actually reflect on how this is likely to play out. So that I will write out in more detail in my long short report. But the sense was that you can still get more upside now that you're got the big announcements on the government. Of course, on the face of it, people are beginning to doubt the number 20 lakh crores, reduce whatever they've announced so far. So some people have numbers varying between 8 to 12 lakh crores that might actually be there. And if you look at the budget expansion, where they expanded the borrowing program by 2 lakh crores, that's what people thought was going to be the stimulant really coming in terms of government spending. While they do not have a direct impact on the government, they do end up having an impact on the financial sector in many ways. So what they are doing is essentially borrowing from banks and passing it on to maybe MSMEs, and the NBFCs being provided new credit lines. A lot of the NPAs would not get recognized because of this new money. So the small industries would be able to repay their debt. So it's a form of, I mean, you may argue that it's a form of evergreening for these loans for the next 12 months, given the current bad situation, which means you will not get fresh announcements of NPAs across that sector, or some of them may even turn better. The hope really is that when you do that kind of evergreening, or you bail out certain industries, you provide NBFCs, even those that are bad, with some kind of new money. Two things people are saying. One is they can actually doubt whether that money will go through, whether banks will lend, but then the government has also done what it says is provided a guarantee. The government's given its own guarantee on these loans, and at some place also mentioned that losses for certain loans up to 20,000 crores would be borne by the government itself. So a lot of that provides banks a good reason to start lending. But then banks may wonder, what about after 12 months, and then they will turn bad, and then we'll have to deal with that problem. Well, if they didn't worry about evergreening, will they worry about this now? The whole thing will come down to believing that, well, the government's going to not come back to investigating on this because they were guaranteed loans. So surely they don't come into question on why they gave those loans out. The real issue is then going to be is whether 12 months down the line demand has really picked up at a pace where it is significant enough to allow these industries to continue to repay what they've ended up borrowing. So I think that's the really big issue, which is, will we get an economic turnaround? So even though you can doubt whether loans will get lent out, but you can believe that, well, if they are guaranteed, why not? It means good business. It will create some credit growth and business growth for the coming year for the financial sector. Still, most banks are actually down today, which may appear a little surprising, or whether it's a reaction to the US markets. Some of the NBFCs are of course up, but coming back to the point that if you've made sure that you don't get any more bad news for several months, very similar to what the US did with the oil market by buying the oil bonds, the next thing the markets will question, not immediately, maybe later on down the line, is fine, once you got a recovery, once business restarts, and will you go back to the same GDP levels as before? Because a lot of people will not be out shopping. Will they shop to the same degree? Will spending come back to the same levels, and will you need additional stimulants for that, or something will have to change on the demand side? Now, of course, the PMS spelled out clearly that they are going to address each and every aspect of the situation to get the economy moving. So I think the announcements we've seen in the last 2 days might not be everything. There may be more to look forward to, maybe today and tomorrow. And unless you've heard it all, to really give a judgment day might be wrong, because for all you know, they come out with something out of their hat with a surprise right in the last minute. So if that's the case, and then you'll have to have, but in all that, you'll have to have something on the demand side. So my case has been that while this is a counter trend rally, even in equities, first of all, don't be in a hurry to call its end, because we crashed 40%, and that more or less discounted a lot of the negatives. A lot of the funding based stock would anyway have been sold into the market. So what are you really looking for in terms of fresh selling? Where is it going to come from? So it has to come from people either who are again gone leveraged, one, two, if people get so scared that they start pulling back from their mutual funds and SIPs, something which has not happened. You still have flows going on. And if FI has got panicky, so they did sell in March, but they're not really selling anymore. The net for April ended up positive because of some flows that happened. And even in May, we got some block deals, so that's going to make the May numbers still look positive, even though the day-to-day numbers are not so great. So you don't have a great rush of funds out of the market, and on the institutional side, that leaves us with retail investors who want to probably panic and short the market, because SEBI's anyway put restrictions on the big players. So who's really going to be moving things over here in terms of the sell side? So which is why I said sentiment is too negative. Everyone's hoping for it to crash right away, but you need to be patient and allow those indicators to really go a little back to the upside, maybe back into hope zone, if not extreme optimism. But whatever the announcements have been made so far don't seem to have really triggered optimism as yet, or even hope as yet. So people are still finding fault with yesterday's announcements. But like I said, there's also there's a case where some lending may happen even at the risk of it going bad. but the hope will be that there are some demand side measures, and that's something that could change the scenario in terms of calling this a bear market rally if they really spend big or do something where projects and demand really show up despite the very bleak scenario that we are facing. So in the meantime, US markets did pause. Like I said earlier, it may only be a pullback. And once we've addressed the demand side, the next thing will be, have we really addressed the interest rate scenario? So that I think the RBI is doing pretty effectively. I put out a post couple of weeks back when bond markets around the world were panicking, mentioning that the 6.5% mark for us would be a cutoff point where if we went above that, it would show some kind of a reversal, and we came exactly to 6.5 and turned down. So once again, you have bond yields falling. So the RBI has been continues to be active there. And the government is of course going to be borrowing more, so they'll have to continue to support it with OMO, so that will keep pushing liquidity. So one part is done, you have a lot of liquidity coming in either through RBI buying bonds or whether it's through all the lending that they may push through the banks by guaranteeing the loans. So you'll have liquidity in place. We've got to see how everything else falls in place to get growth momentum back, which is still one of the promises that the PM has made. Now it's easy to doubt that, thinking that he's only making announcements to win votes. But remember, this is the first year of the new government. And when you come on national TV and make an address to the nation and say that you're doing something, and if it ends up simply being more talk than what's really on the ground, then I think they lose a lot of points on that. So if he's taken the courage to make those kind of announcements, surely there's going to be enough on the plate, is what I would think at this moment. And rather than jump the gun, let the announcements come through. I think that's the approach to really take here. They're keeping bond yields down, so they're keeping that pressure off. They're providing liquidity, they're keeping that pressure off. A lot of the bad loans will not get announced as bad or get greened over for the next 12 months. And most places now are slowly moving towards announcing a slow return from the lockdowns. I think Australia has already started moving. UK said we will get there. They've still been concerned about using public transport based on the address given by their PM. New Zealand, I think, made some announcements in that regard. US is doing it at different paces in different states. Some states have moved faster based on the number of cases. California, where there were many cases, moving much slower. And in India, we're being probably again area specific, so it's again based on which area moves faster based on how many cases there are out there. So red zones, of course, are going to take longer to open up than others. So that's the scenario overall. We're trying to move back to normalcy. The government's now finally making those announcements that can give you the final fillip on the upside as far as markets are concerned. Then the question should become how far can they go, and those are the Fibonacci and other calculations we'll continue to make and post. I'll probably write a detailed long short report as this goes along in the next couple of days, hoping to look for some more confirmation that what I'm saying is playing out. And all said and done, at the end we will watch out for whether the recovery in markets because of these announcements can continue into a new cycle of growth or not, because and I think I'm repeating it, that the demand side it gets really addressed in all of this, because if the stimulus is not enough to address the demand side, once you've got the bounce back because of a reversal in sentiment or short covering, the markets will lose their strength and once again start to roll over, not just here but probably around the world. So that's the risk on the other side. The interim in between thing is that will all this liquidity somewhere at some place start to create inflation or reflating prices, and that might create an opportunity all of a different kind altogether. So that's something to watch out for in various other assets like currencies and commodities that I continue to track, and I'll probably reflect on that in greater detail next time. So thank you. That's all for today.